Hey, it's Toma. Question for you. What is the return policy for your mortgage? In other words, how do we estimate the penalty for breaking your mortgage? The most popular mortgages in Canada are the 5-year fixed and the 5-year variable, and both of these products are closed, which means that if you pay them off before the end of their 5-year term, you'll be charged a penalty to do so. And statistically, 2 out of 3 Canadians break their mortgages around the 3rd year for all kinds of reasons, switching their lender for a better rate, refinancing, the sale of your home, divorce, and so on. So, how much does it cost to break a mortgage? Well, before we dig into these estimates, remember that the best way to find out your prepayment penalty is always to contact your mortgage lender directly and well in advance to ask them exactly what your penalty might be on a given date. Anyway, when it comes to estimating a mortgage penalty, there are 2 main formulae for doing so: the 3 months interest formula and the interest rate differential, also known as the IRD. For these examples, let's assume in both cases that you still owe $500,000 on your mortgage and that you're 2 years into your 5-year term. Or in other words, you have 3 years left. If you have a variable mortgage, your penalty should almost always be 3 months interest. Let's assume your current variable rate is 3%. You take the remaining mortgage balance, $500,000, multiply that by your current interest rate of 3% per year, and then divide that result by 4 in order to get the interest estimate for 1 quarter of the year, or in other words, 3 months. In this case, the penalty is estimated to be $3,750. Note that some lenders may use your actual current rate, otherwise known as your contract rate, and some might use whatever the prime rate is at the time, so again, call your lender to make sure. But also note that with a variable mortgage, it doesn't matter when you're breaking it. The 3 months interest formula should always apply. Now, suppose you have a fixed rate mortgage. When lenders calculate the penalty for fees, it's typically 3 months interest or the interest rate differential, whichever is more. So let's see how to estimate that IRD. First, start with your current interest rate, and let's just say it's a 5-year fixed at 3.99%. Now, the next step is to find out what your lender's current rate would be for a term that's the same length as how much time you have left on your term. So since there are 3 years left in your 5-year term, that means you have to look up your lender's current rate for a 3-year fixed. Let's just say that that's 2.99%. Subtract this from your rate of 3.99% and we get a difference or differential of 1%. We then take this differential and transform it into a monthly amount by dividing it by 12. And then we multiply that monthly amount by the number of months that you have left, which at 3 years is 36 months. Finally, we multiply that 36-month amount by the $500,000 you still owe, and the result is a penalty estimated to be $15,000. Now that's just a basic IRD estimate, but it might not end there. You may not know, but technically the contract fixed rate that you got was given to you at a so-called discount to the lender's posted rate, which is typically much higher. To go see for yourself, just Google posted mortgage rates and the name of your lender, and you'll see they're higher than your contract rate. Some lenders may factor in this discount that you got as well, and it can greatly affect your penalty. So for example, if you got a contract rate of 3.99%, and that happened to be at a 1% discount off the posted rate that was then 4.99%, the lender may pile on that same 1% discount off the 3-year rate used in the previous calculation, which was 2.99, so that it would now be 1.99. It sounds nice, but if we subtract that 1.99% from your 3.99, we get an even deeper spread, or IRD, of 2%. Plugging that into the same IRD calculation as before, we get an estimated penalty of $30,000. In this case, that so-called discount is really coming back to bite you. So there's 3 things to take away from the IRD calculation. Number 1, they're way more complicated. Number 2, an IRD penalty can be a different amount at different times during your 5-year term, so you may never be able to accurately forecast your penalty in the future. And number 3, obviously, is that an IRD can be a much higher penalty than 3 months interest and catch you way off guard. Anyway, to wrap things up, these are just rough examples to show you the methods of estimating a mortgage penalty in Canada. Your own rates and figures will be different, and so will the way that each lender does the math. So remember that calling your lender directly should always get you the most accurate figure. I hope you understand all this a little better now, and that the next video you watch is way more interesting. Thank you for watching, and feel free to share this. Cheers.